Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries of financial filings and show you what companies are really up to. Today we're diving into a very interesting report from Radian Group Incorporated, and let's just say they've been busy securing some serious financial firepower. Before we dive in, if you love getting straight answers and insights from these dense corporate documents, make sure you are subscribed. We also have a fantastic Discord community linked in the description below, where we break down these reports and discuss strategies. Alright, so Radian Group Inc., a company involved in the mortgage and real estate services sector, has just filed a current report on Form 8, and the big news revolves around a significant update to their credit facilities. This isn't your everyday filing, it's about them accessing a substantial amount of money to fuel their operations and growth. The key date here is November 4th, 2025. On this day, Radian entered into a new credit agreement. Think of this as a major handshake with some of the biggest players in the banking world. Specifically, they've got Royal Bank of Canada as the main agent, along with other lenders who are essentially giving them a financial lifeline. This new credit facility is a big deal. It is an unsecured revolving credit line, meaning they can borrow money as they need it, up to a whopping $500 million. This is like having a supersized credit card for the company, but with much better terms and for serious business needs. And it is not just that $500 million. This agreement also has what they call an accordion feature. This essentially means Radian has the option to expand their borrowing power even further by another $250 million. This is a crucial piece of flexibility. It allows them to tap into more funds if opportunities arise or if they need extra working capital for growth initiatives. Now, talking about the timeline, this agreement is set to last for 5 years, maturing on November 4th, 2030. This gives them a solid window to use these funds and plan for the future. The good news is that as of this filing, there are no loans outstanding under this new agreement. This suggests they are entering this with a strong financial footing and are planning to use this facility strategically, not out of immediate distress. So, what kind of strings are attached to this massive loan? Well, like any big financial deal, there are covenants, which are basically promises Radian has to keep. Some of these are pretty standard for this type of financing. For instance, they need to keep their subsidiary, Radian Guaranty Incorporated, in good standing with important government. Backed entities like the Federal Home Loan Mortgage Corporation and the Federal National Mortgage Association. This is vital because it directly impacts their core business of mortgage insurance. They also have to maintain particular financial ratios, like keeping their debt levels in check relative to their overall capital, and ensuring they have a minimum level of consolidated net worth. These are like the financial health checks that the banks want to see regularly to make sure Radian is a stable borrower. Let's talk about the interest rates. Radian has a choice between two types of rates, an alternate base rate or a SOFR rate plus an applicable margin. This margin changes based on Radian's credit rating. The rates on the alternate base rate loans can go from 0.125% up to 1.5%. For SOFR rate loans, it is a bit higher, ranging from 1.125% to 2.5%. On top of that, they have to pay facility commitment fees to the lenders, which range from 0.15% to 0.45% depending on their credit rating. The agreement also spells out what happens if things go wrong, the so-called events of default. These include missing payments, breaking covenants, or serious financial trouble for Radian or its subsidiaries. A significant one is if judgments against Radian or its subsidiaries total more than $150 million. This new credit agreement actually replaces an older one from December 7th, 2021. So this isn't just a new loan, it is an upgrade and restatement of their existing financing, reflecting potentially improved terms or greater needs. Now, thinking about this from a high level, what does this all mean? Radian is essentially securing a substantial war chest of funds. This could be for several reasons. They might be anticipating a period of increased business activity, perhaps a surge in mortgage refinancings or new home purchases, which would require more capital for their insurance operations, or they could be planning for strategic acquisitions, investing in new technologies, or expanding their service offerings. The flexibility with the accordion feature suggests they are positioning themselves for future growth and are keen to act decisively if opportunities arise. The fact that they are using existing lenders like Royal Bank of Canada and amending and restating their previous agreement, rather than going to entirely new financiers, often suggests a good working relationship and that the company is meeting its obligations. However, one thing to always remember with significant debt facilities is the increased risk. While Radian is currently not drawing on these funds, a large credit line means a large potential debt burden. If market conditions change unexpectedly or if their core business faces headwinds, the obligation to repay and service this debt becomes a critical factor. The covenants are there to protect the lenders, but they also place constraints on Radian's operations. In conclusion, this filing shows Radian Group Inc. proactively strengthening its financial position. They've secured access to a significant amount of capital which, if managed wisely, can fuel growth and strategic initiatives. The key will be how they deploy these funds and navigate the economic landscape over the next 5 years. It is a clear signal that they are preparing for the future, whatever it may hold. Alright, that is our breakdown of Radian Group's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this move will solidify their position or introduce new risks? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord in the description to join the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.